All right, welcome everybody to the London session. We're going to have a very special guest here. You could already see him here. It's Francis Green, former footballer turned trader. If you don't know who I am, my name is Deeyana Angelo. I've been trading for 16 years, and 11 years out of that, I've been a prop trader for a few prop firms. I've been trading crude oil. But Francis, you've been trading M&Q for the London session. Good morning. How are you doing?
I'm good, thank you. Yeah, it's great to be on. Better our time as well, rather than having to trade later on in the day. But yeah, just NQ. I would say that we're fairly new to futures because we were crypto for a very, very long time. So, we've only been trading futures, 6, 7 months really. So, um, yeah, I love it. Community loves it. So, just NQ at the moment. Yeah.
So what were you trading before?
So predominantly Bitcoin, 99% Bitcoin.
Okay.
The
Intraday or swing?
intraday, intraday, yeah. But
Interesting.
since the ETFs, it's slowed down a lot. Volatility is not like it used to be. So
Yeah,
any
that was my experience because a couple of years back, I actually tried doing Bitcoin intraday, and I just found that it moved sort of in one go, and then that was it. So if you didn't kind of catch that move, there was just nothing to be
yeah,
had, and then the spreads were pretty horrendous as well.
yeah. If you're not on like say for a certain platform that specializes in crypto, then your spreads can be way way too big. Um, But because of Fibonacci, I was always looking for liquidity grabs, swing failure patterns. You used to get them quite a lot in Bitcoin and Ethereum, etc. But mainly Bitcoin. But due to the ETF, I think the movement, the volatility, the amount of people that trade, retail traders that actually trade Bitcoin, I don't think it's as high. That's why I noticed, and that's how we came across futures. It was just a video from Topstep, and I was like, "This looks interesting." And then, the rest is history.
It's funny. That's exactly how I found Topstep as well. But that was like in 2015. I was looking for a Chicago prop firm remotely when I came back to London, and I was like, well, I want to trade for a Chicago company because they know what they're doing with prop. So I Googled Chicago prop firm futures remote, and Topstep came up. So I was like,
Wow,
okay,
wow.
interesting. Yeah, and then the rest is history. Obviously, I was the first female to pass the combine, which again I didn't know until very recently when Eddie told me this year actually, because I was like, yeah, well, I mean, you guys did the whole funded trader interview. I don't know like why you did it with me, and he goes, oh, it's because you were our first female to pass the combine. I was like, was I?
Wow,
Okay,
2015 as well. That most people
long
didn't
time
even
ago.
know about trading then. That's crazy.
Yeah,
Uh,
well, I mean, I've been trading since 2007, 2008. 2007 wasn't very serious. I just kind of dipped my toe and had no clue
yeah.
about anything. So, what led you into trading? How do you go from football to trading?
Well, it's funny. I've always been one of those that I've never liked orders, which I've never liked being told what to do, etc. Unless I'm really really into the actual task or what I'm doing. So sports, I've always been sporty as a young age, and I struggled being a footballer because of coaches telling me what to do. I fell out with nearly every manager that I had because I just struggled with taking orders, taking orders. So I knew when I retired from professional football that I'm going to struggle probably to, fit into the 9 to 5 world because I just wasn't conditioned. I'd never been in a 9 to 5 world in my whole life. And then when I retired at 32, I went to university to do psychology because I like psychology
Wow.
and did a degree in that. And then tried a few other things, football agent, I like suits. So I was thinking of designing suits and all these types of things. But trading was always one of those things that kept popping up because of the crypto industry. And I came across, once I started my self development journey, I came across Austin Silver, which is amazing.
Yes.
He's on Topstep now, which was
Yeah,
crazy.
I've actually just done a
A
podcast with him.
podcast,
So
yeah.
yeah. So on Wednesday it's coming out
And
tomorrow.
he was the first person that I thought, I actually like. I like this guy. I like this guy. I just had a connection with him. So I'm talking 2016, maybe
Right. A while back.
2016, and he had a strategy, and he was doing like live trading on another company's platform. I believe it's called T3 or something like that. And you paid a
Yeah.
monthly subscription, you could trade with him in a live room. But at that time of my life, I just wasn't ready. I wasn't ready. I just, when you're just not ready for certain things, my discipline, my lifestyle, my old habits were still within me, and I just couldn't be a trader. So I had to sort my life out. So that's when I really went on the self-development journey of reading, all those types of things. And then went to Dubai, a bit of real estate, kept trading on the side, and then decided once we moved back to the UK, I'm just going to go full-time trading. And that's how it started. So,
It's amazing.
yes, it's been a very, very interesting journey.
I think it always is. Yeah.
Yeah,
For me, it was similar. I was a musician for many years, like kind of at a very high level. So I was a pop and rock musician. So at one point, I
yeah,
spent 2 months playing with Rod Stewart as his live saxophonist in a little band that we had. So yeah, a lot of session work, a lot of touring. But then I started getting tired of that. Similarly, like yourself, when I got to my 30s, I was like, I can't keep going around the world. It's just, it's just not, it didn't really match what I was feeling on the inside, that I could kind of just do that for the next however many decades.
yeah,
And I found trading. I was already doing trading and I started doing really well. And in the end, I was just like, you know what? This doesn't make any sense. I'm making more money in
yeah,
like half a trade than 3 days that I spent touring. So it's like, well, what am I doing here? And then
yeah.
I decided to leave all of that and actually did go into the office. Interesting that you say that you didn't like being told what to do, because I didn't like that either. I actually still have a problem with that. I don't like people telling me what to do, and I like to be my own person, my own boss. But because of the nature of how prop trading was back then, you had to be in the office, right?
Yeah.
Okay, let's have a look at some of these markets. I'm going to flip to your screen so you can give us a rundown of how you do your NQ trading during London, because I know that is your main session.
Yeah, so it's something that we've kind of warmed towards purely based on school runs in the afternoon. My mental fatigue kicks in the afternoon because I get up early, I go to the gym, all those things, the four children, even though three are big, wife, and all the things that you kind of need to do in life to stay sane. So my mind in the afternoon seems to be not really focused. And I noticed that I wasn't great in New York because if you're emotional, you can chase and I struggle with New York. The problem is New York tends to be the best entries for the way that I trade. So I have a little issue there.
Interesting.
So in London, what I look for, I know that at times we can just range, we can try and snipe at the Asia high or the Asia low, or if we get up to the previous daily high or the previous daily low, we may have an opportunity to get in there. But that tends to happen around about New York. So I think you have to try and get in early on the London session, after the first hour, but maybe that 10 a.m., 11, and try and continue that move until New York then comes in and then kind of, pulls the rug from under you or whatever it likes to do. So I try to make my move or my money, within the first couple of hours. And if it continues, then excellent, we can stay in there. But if not, I try and make sure I'm out before the New York session, which is a little bit of a nightmare because I like to see that, and it normally continues within the rest of the day. But it's just to do with timing, being in the UK, and maybe that mental fatigue in the afternoon where I can't really concentrate on trading. So I trade in the London. So um,
Yeah,
when it comes to
it's
what I
yeah.
look for
That, that
is
that 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 definitely resonates with me. Although I do take breaks, so these days I've got to a point where I force myself to have either a yoga nidra session in between my times of day when I trade, because I do tend to trade through London and New York, and sometimes I even trade all the way through to the end. But I partial my day in like sort of 90-minute segments.
Right.
So I would trade DAX usually for the first sort of hour and a half, and then I might carry over a trade in DAX that lasts for like the next 2 hours, but I don't actively monitor it, so it doesn't kind of sup my mental capital. It's not like scalping, and usually that tends to be pretty much done by, I would say, about 1:30 p.m. our time. And then I have a big break. So then I
Mm,
don't do anything until about 3:30, 4 p.m. And that's when I trade crude oil typically.
right.
And then I have another break for kind of lunchtime. I go out with the dogs, I do something else, or I do another yoga nidra session. And then I get back for the power hour, which is when
Mm.
I would
That's
usually trade
interesting.
ES. Yeah.
It's something that I might start looking into to try and have those, because I like to trade now. I started looking for, maybe that 90 minutes, 2 hours London. Then I do some obviously teaching, mentoring, building stuff behind the scenes. So maybe then I can have that break. And later on in the day, once we've once he's back in the little one and caused chaos from his school, maybe I can sit down and have a look again. So it is again a continuous learning to what fits around your lifestyle.
It is. It really is.
And I
Yeah.
think it's very important to try and get that early on. I struggled with that early on. It took me a long time because I just wanted to trade. I wanted to trade. I wanted to trade. And I know you just can't be like that. You really need breaks.
No,
You
no,
really need
no.
breaks.
Breaks are so important because you
Yeah.
start to lose the plot like halfway through. You're like, what? I'm just clicking buttons at this point. I have no idea what I'm
Yeah.
doing.
Yeah,
Yeah,
exactly.
and it doesn't matter any kind of systematic approach, stats. It all just goes right out
It
the
all just
window
goes
when you're
out the
tired.
window,
Yeah, exactly. Yeah, start doing Muppet things.
Yeah. I'm very stoic, so I do a lot of stoicism, and even that completely goes out the window when I'm trying to trade at times,
Yeah,
especially for fatigue and remain calm. You can't control the outcome, and just completely goes out the window. And it
yeah,
just,
yeah,
yeah. So,
yeah.
so, so what I look for in the morning is I come in and I'll do it on the Topstep chart. I use TradingView, but I'm trying to make sure I do all my charting on Topstep as well. But I tend to like it very, very clean and not a lot on my screen at all. So let me just get rid of the VRVP. So what I look for is obviously I always start off with the daily term time frame to see what happened on yesterday. And instantly I just look for levels of zones of interest. So I always put a line, but it's normally a zone. And what we have is we'll have price action within those zones. So I'll have a look at what happened yesterday. We can clearly see that this zone is going to be an important level. If we retrace back up to there, I'll be looking for short from there. Um, and then I like to just go over and have a look at the previous daily highs and previous daily lows. That's just what I like to look for. So if I just go over here, forgive me on the top step one, but so that would be my previous daily high, and I'll make it orange for today for this while we're on here, and then that would be obviously my previous daily lows. As soon as I've got that, I can normally tell that there's going to be a level of interest where it's going to be. Straight away, we know that now. Yesterday is going to be a key level here. Let me just change that because it shouldn't be that color. Let's just get rid of that. So this zone is going to play as importance. We know that 19.5, 19.5, 20. We need to hold that if we're going to continue to look to the upside. So instantly, I will look for short to see if we can come down to that 19,500, or do we sweep the Asia low? So I mark the Asia low. If I do sweep that level or get down to that level, I've started implementing things that I've been learning from Dakota, I've been learning from Anne Marie. And that's why I think Topstep TV and etc. things like that, you can learn so much for free and you can add that to the way that you trade. And
Absolutely.
I
Yeah.
look for the 3 candle reversal on the 5 minute or bearish or bullish engulfing. I do like the retest, and the retest, I'll look at the 100 tick chart to see where I can get a good retest. Um, and then I'm looking to get into the trade. So that's how I trade. But I will only trade at the outskirts, the levels of the extremes, or whatever people want to call them. I used to trade on the inside with local Fibonacci's, and it didn't really work on NQ. It would work on Bitcoin, but NQ, it would work if you're only looking for 10, 15 points. but I'm trying to hold a little bit longer than the 10, 15
Yeah, so
minutes.
you need those bigger reversal areas, and that's not going
Yeah,
to come from the middles of ranges. I'm the same. One of the big things that try to teach people is to stay away from the middles, right?
yeah,
So getting involved in the middle of the range, whatever kind of day that you have, like let's say you have a trending day, but then we kind of stopped inside a range. Even then, there's value in looking for the bottom of that range or maybe a break of that range. But in the middle, there's just no opportunities. It doesn't really make much sense to me to try and get chopped up and get a lot of paper cuts trying to catch a direction in the middle. So I also, like yourself, look for the extremes either of the range, but also my intraday average session ranges and daily ranges is where I may look for those big reversal points,
yeah,
especially if we're having an outside day. So if
yeah,
we're not trading inside yesterday's range, there are other ways to kind of like try and identify a top or a bottom unless we're in a mad trending day. And
yeah.
then it's just like look for a pullback. If there is one, point, click, and pray. Like that's all you can do at that point.
I've noticed what honestly, because the way that you and then Coach Jay, you mentioned it yesterday with the data. I'm not a data person,
Yeah.
so I find the way that you trade like crazy, unbelievable. With all the data, I'm very much you can see. I look for a zone, I look for a line, and then I look
See,
for trade.
I look for zones as well, but I find that because I'm a big nerd. I mean, I know I don't look like one, but I'm definitely a nerd. So I am very into data analytics, and to me, there's comfort in knowing that if I want to see something, like let's say I'm doing a neutral day idea, or let's say on crude oil or something. And then I'm kind of thinking, well, if we extend to both sides of the range, I want to be either short or long at the bottom. But then I'm like, well, how many times does that actually happen? Like, is the extension of the first hour of trading both sides? Is that something that statistically happens often enough for me to take advantage of it? So this is where data comes in. This is where tools like Edgeful come in. And I find huge comfort in that. Or, for example, I sniped an NQ trade. I don't trade NQ that much, but there was, every so often I will see something that is statistically interesting to me. So, for example, on Edgeful, I saw that the consecutive bars on NQ intraday, if you had like 30, I think 12 candles or something that all go in the same direction, consecutive bars, the next one is probably not going to continue because in the last 6 months, we've only ever had maximum 12 red bars or 12 green bars, right? So to me, that represents an opportunity for a fade. And that's how I will use it. So I think it maybe looks very complex when you first start getting that kind of data into your trading, but at the end, it's very logical. And
Yeah,
that's what I look for. I just look for
yeah.
logic. So I have my zones, I have my areas, and then stats are just there to kind of support that
Yeah.
idea.
You must love Edgeful then.
Yeah. Honestly, I used to do my own algorithms. I have my own little counting algorithms that don't really have anything graphical going for them. It's just like a whole bunch of text that I output because I can code, but I'm not very good at like plotting things on the chart. So, but utilities I can do that like until the cows come home. It's super interesting to me. But I'm not great at whenever I need to actually spew out something graphically on the chart. I have no idea how to do that because I'm not a coder by design. It's not my profession. It's just something I kind of picked up on the way. But yeah, so when it comes to those sorts of stats, I used to do that myself. And back in the day when I couldn't code, I was doing it in Excel. I was like a
Wow.
spreadsheet queen. It was just cancerous. It used to take me like 3 hours to get all of the time series data into it and then to actually get the numbers that I'm after. But now it's just like a few pieces of code. And we have ChatGPT. Actually, I've been utilizing ChatGPT for that. So you just give it a prompt and then obviously it makes mistakes and errors and stuff. So you have
Yeah.
to be careful. But once, all the kinks are worked out, you just run the code and it just
It's
spews out
amazing.
all the, yeah.
Amazing.
But now we have Edgeful, right? So I don't even have to do
Yeah.
that. I can just go there. I can actually just say to Andre, hey, can we have this stat, please?
Yeah.
And lo and
Edgeful is
behold, magically it just appears. So yeah.
if you're into data, Edgeful is incredible.
Yeah.
Incredible.
Yep.
It
I
really
agree.
is. It really is.
Yep.
Um, but so I think someone said in the chat is the levels session specific. I just in the London, we always know that Asia highs and Asia lows are. We're going to have probably some sort of reaction if we get to those sorts of levels. And then I wait for the previous daily highs and previous daily lows. Now, as Dee was talking about, we were talking about we're in the middle of the range. If you can see on my chart now, we have this zone here, which is is going to be an important level. It's going to be an important level just because of structure, market structure. You can see if we break above this 680 to 700 on the NQ and we find some support, then all of a sudden we could change, the structure could change, and we could try and go for the Asia high and then yesterday's high. But it's in the middle. So the probabilities of that trade happening in your favor are still not as high as if you're on the extremes. And I used to trade a lot in here with crypto, but you couldn't stay in trades for long. And if you, for me, if you want to be in the game for a long, long time, it's something that I struggle with. I used to struggle with looking at the bigger picture. How long do I want to be a trader for? And when you first come in, you might say you want to make some money to go on holiday or whatever you want to do. But once you start to like trading, you start to see, I could be in this for 10, 15, 20, 30 years, however old your age. Um, so you need to try and take the trades that are one going to keep you in the game, two get to that payout process, and then invest that payout. And it's a massive journey along the way. And Dee's been in the game a lot longer than I have. He will tell you that you must look at the bigger picture, which means taking the trade with that higher probability. And that's something that I
Absolutely.
need to
Yeah.
take on board. Definitely.
Yeah, so for me, it definitely, you see, people are constantly kind of criticizing me, oh, why don't you scalp? Why don't you do this? And I do scalp when the day calls for it. If we have a neutral day, range bound day, of course I'm going to scalp, right? I'm not going to hold it from one side to the other side because that's a low probability trade. The most likely target on those sorts of days is the middle of the range. And then in the middle, everything gets a little bit, how does Anne-Marie put it? Squishy?
Yeah.
I just love her terminology. Gets a bit squishy in the middle, and over the years I just lost the patience to look for small opportunities that are not going to reward me properly. And I just stopped doing that, and there was also actually a moment in one of the prop firms when I was still a kind of a junior trader. I sort of was okay and I was pretty talented, but I was still doing a lot of trading, right? Because that's what I thought I had to do. It's like, oh, I've got to do 40 trades today. No, you don't. You're not a market maker, even though one of the companies I worked for, they had a market making thing. But yeah, so it's a totally different ball game. Like you have a volume that you have to fill on the day, and I only spent like a week in that department. I was like, this is cancer. I don't want to do that. It's horrible. Like you go home and you're just like your eyes are just all bloodshot, and then you've been staring at bids and asks all day, and it's just not my style. So in the end, I just cut out all the setups that I don't feel will reward me for my time and
Yeah.
effort that I put into finding it.
Yeah.
And I just go for the big reversals. This is why, I sit on my hands. And as a former musician, just like yourself, you're an athlete, we have that natural self-discipline that probably comes a little bit easier than for most people. Because I feel that as a former athlete, you had to force yourself to go and, practice so many hours in the day. And as a musician, I had to do the same. You do like one single phrase for like 8 hours. That's not
Yeah.
normal, but at the same time, you have to do that in order to reach any sort of mastery in any skill. And, one thing that I took away from a colleague was, I was like, in this trade, I kept trying to go in and out, and it was just like a nice, smooth move down. And I kept going in, grabbing 10 ticks, coming out, going back in again, getting hit for maybe like a couple of ticks. So at the end of all of that, after about, I don't know, an hour, I probably did like 12 trades. And he's like, okay, so how many ticks did you grab out of that? And I looked at my net P&L with all the commissions and everything. And I was like, oh, well, I suppose it comes up to about, About 12 ticks. And he's like, yeah. See, I've been on the same trade as you, except I entered one trade and
Yeah.
I held it and I'm up 60 ticks while you were jumping in and out like a grasshopper. So this is where I got my whole like over
Okay. Yeah.
trading, grasshopper, you're hopping in and out of trades. So I was like, oh wow. And it really made me think. I was like, hold on a minute. Am I
Yeah.
doing this like all wrong? So he's made more money than me, and I not only spend loads of time doing this and just, kind of trying to find all the little pullbacks and going up and down and up and down. So it's like, why am I doing this? And that changed everything for me. And it's
Yeah.
so funny how like one sentence from somebody can just completely change your mindset. It's
And I can
amazing.
see why. I can see why people jump in and out. I've got some people in our community and they're very eager to jump in and out. And I went through that process. I think you need to go through that process to realize that the amount of mental capacity I've just used when I could have just maybe found a better entry and stayed in that trade until it was time to get out. Um, but I think when you do come into trading, it's, can I grab this money? Can I grab that money? And you have the fear of the market taking them away from you and all. I think it's just a cycle that you really, really have to go through. And there are a very, very small amount of unique people that can come into trading and get it from the beginning. I think it's
Yeah,
very, very limited just
it's
because
very
it's
rare.
against human biology. It's just the opposite to the way that our mind works. So I think you just have to go through that journey. I think you have to lose
Absolutely.
combines. I think you have to blow XFAs. I think you have to. I think you have to do this to understand that to get the capillaries and rewire the brain. I just think it's part of the process. I really do.
Absolutely, absolutely. And today we have that opportunity to have resets and multiple XFAs and everything. Back in the old days, you had to go into the office, you got one shot. You usually went through a pretty lengthy interview process as well to get there. And
Yeah.
then if you blew the funded account, they would just boot you out the door. Like
Oh,
that
that
was
was
it.
it.
So
I
yeah,
mean, the
and now,
opportunity now, it's just
yeah,
what
it's crazy.
Topstep do. I know, we're both on Topstep now, but I, I do find it hard to see what more they could possibly do to give you the best chance to be a trader. I mean, they even gave you the DLL and people moaned, and now we've got rid of that.
Now we've removed it. Yeah, exactly. Yeah, and now they want the 2 days removed. It's like, dude, if you can't trade for 2 days, or like, how are you gonna trade in an XFA that has no
Yeah,
end game?
they want
There's no
one day
end.
pass, 50 accounts, no
Yeah.
DLL. It's just
Why don't
crazy
do
what people.
hundreds? Why stop at 20 or 50? Let's do 100.
Uh,
Sky's the limit.
there's a couple
Yeah.
of questions. Couple of
Yeah, I
questions.
see it. I see it. Yeah.
Yeah.
So we do have Bruno, who's our lovely moderator here. So he's pulling questions. So let's get some questions on the go. Angel Day Trader says, actually, let's start with a fun question. Will S. Francis, are you a better footballer than trader or better trader than footballer?
I'm a better footballer than trader, probably.
For now, right?
For now,
Yeah,
yeah,
yeah.
probably.
That's a funny question.
Yeah.
Angel Day Trader says, what indicators are you guys using for volume on Topstep X?
Well, I just look at the obviously you got your fixed range volume, and then I use the VRVP.
Yeah, same.
They're the only two that I use. I know some people sometimes use volume, obviously at the bottom of the
Yeah,
screen.
the bottom of the screen. Yeah, that annoys me. I actually
Yeah,
like to use, hold on, let me get my screen
I
up.
think you use VRVP as well, do you?
Yes,
Dee?
yeah, same. So VRVP, and then I look at just low volume nodes. But that same information, like I always say, can be seen on regular candlestick charts if you know where to look and how. Anytime you're going to start to distribute or accumulate, so anytime you create that balance, that's always going to show up as more volume. So that's what creates those higher volume nodes. And then you have areas where price kind of went through it very quickly that creates the low volume areas. So when you know how to look for those away from volume, that's useful. But I can appreciate that volume profile makes it a little bit visually easier to have that vertical histogram and just to kind of see it
Yeah.
separately from the candles. But yeah, that's what we both use. I obviously have my company that does indicators, and I use something else for that. So, there I use market profile. I'm hoping we're going to get market profile TPOs. I know they're planned. So that's probably going to be here soon, because I know there's been like thousands of people who are asking for that. So hoping to get a TPO profile into Topstep X. But when it comes to charting and stuff, I always have a separate charting platform and a separate execution platform. Because I've done too many fat finger trades where I'm
Do you
trying to
trade
draw
with
something.
TPOs? Do you
Yeah.
trade TPO and look for
Yeah.
take single TPOs, and
Yep.
do you do that?
Yep.
Yeah.
So I use a lot of TPO profile in my approach. I will look for the neutral day type with the extensions of TPOs on both sides of the initial balance. I will look for a trending day whenever we see the single prints. I will look for single prints fade for my auction fades setups. Those are my defined setups that didn't really have a name before, because an auction fade doesn't necessarily have to have single prints. It can be a slow grind up that kind of creates structure on the way, but then it just sort of smashes through it. It's almost like, I suppose you would call it a bearish flag or something. So there's always different names that people have sort of coined to these terms and events that we see, but they're all one and the same
They're all
thing.
the same.
Exactly. So
Who's the
anyone who
best at that?
teaches any sort of smart money concepts, I will never bash them. I was
ICT.
always applaud them. So, I'm very diplomatic.
ICT is a marketing genius.
Yes. Oh, yes. Yeah. The stories that came along with the methodology are quite epic as well. the MIBs and all of that. But it's good. I think he's done a great job to get such a huge following. So all power to him, right?
And he's brought, like you say, probably, I don't know how many people, but he's brought a lot of people into trading as well, which is also good for the industry.
Absolutely, absolutely. He's definitely popularized it and sort of demystified some of the movement. A lot of people used to think that it's random, but then you come across somebody like himself, and he's actually saying that there's a logic behind that. This is what they do at this time of day. So he gives you structure, and anybody who gives you structure can be very, very helpful. Whatever you think about the guy, it doesn't matter, but he does have things that he's saying that he's observed in the market. Whether he himself is successful or not, that's completely beside the point, because execution versus observation are two different things. And, even though we can maybe sometimes read the market very well, we can fall short at executions for various reasons. But there's no doubt that he's given a lot of people a lot of new skills and a new way to look at the market that is not like, oh my God, why did that happen? No, let's see what time of day it was. What usually happens at that time of day? That's what it's all about. So, yeah. Let's see some more questions here. What are your risk parameters and trade size?
That's something that I've been experimenting on, and that's the great thing about combines. You can experiment with certain combines, etc., things like that. So initially, I'm always a 2-to-1 guy. It's kind of the rule as you come into trading. Try risks at 2-to-1. You may move stops in your early trading. You may panic. You may do these things. You may take profit early, and all these types of things. Again, I believe that's just part of the journey. But if you're set up to a 2-to-1, you know that you're going to be on the right side if you stick to your rules. Obviously, sticking to your rules can be a challenge, as we know. But if you stick to your rules, that 2-to-1 is a nice place to have a look for your risk. Now, it's not to say I'm going to close the trade if we get to a 2-to-1, because that trend could continue. But what I do like is I might move my stop loss to entry if we get to around about that 2-to-1. And if we're looking like we could just continue, no problem. But if we're going to hover around that level for a little bit, maybe stall, then I might look 50% in and then see what the rest does. That's the kind of basis and the foundation that I look to go on. Now, like yesterday, if I would have caught the trade yesterday, some of the community did. I didn't. I wasn't trading yesterday. But you may have got a 4 or 5-to-1. Whether you stayed in that trade is completely down to how you are going to, as an individual, where you are in your self-mastery, all those types of things. So in hindsight, it looks great. But during the trade, it's very, 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 very different.
Yeah, hindsight capital at work. Oh, I left so many ticks on the table. What did you leave on the table? You took 2R. You didn't
Yeah.
leave anything. Like, this is one thing that I've been trying to drill into my my coaching sessions as well. That, you know, people are moaning about moves that are generally lower probability.
Yeah.
It's like trending days. They don't happen that often. Like, even now, let's say that they happen at 30% of the time. So in the last year, 30% of the days were proper trending days where you had like a million ticks on the table to take. And it's like, what are we going to do for the rest of the time? Like, just be high on hopium and just go, I'm going to get the 10-1, bazillion to 1 trade.
Yeah.
Oh my God, I'm just going to. And then you chase that every day, and every day you get smacked with a stop loss. I think that's how some of these guys who make a lot of cash one day and then go on the daily loss limit bonanza for the rest of it. It's because they're chasing. They had one big day and they want to repeat that euphoria and, you know, dopamine rush and everything that comes with making that in one day. And then it's just like complete.
I mean, those big days, they look fascinating when you see them on, you know, top XFA, $20,000-$30,000 a day. I think they look great. And you know, I'm not standing here and bashing anybody that does that because it's unbelievable.
Yeah.
But for the daily loss limit and the amount of 3 or 5 contracts you have to have on to go through the drawdown, I mean, I believe you have to be a certain type of person just to be even to sit through that drawdown. And you need to make sure that you've got good data of how many times does that strategy work, at what levels, at what times. Then I think you can go for the huge moves like that. Even the likes of Dakota, as we know, is a great trader, but you see areas trade location, sometimes he would just go in with micros. And this is a trader who can make
30 grand, 30-40 grand in a day. Yeah, exactly. So you have to put perspective into everything. So, you know, that question of, you know, what are your risk parameters and trade size? For me, that would depend on the size of the account, the amount of buffer that I have in there. So obviously I'm not going to be a lunatic and, you know, if I have like 2K in the account trading like 5 and 10 contracts, that's just lunacy because you're not going to, you know, if you make it on that day, you should just go, thank God, and lock it up, you know, and never do that again. But otherwise it's, you know, to me, I would err on the side of trading smaller. So I don't even think about sizing up until there's like 30-40K in there. And then maybe I might do 2 contracts. But again, I was used to trading bigger account sizes, and there, you know, I use like 0.3% of risk per trade. Obviously, I can be a lot more aggressive on prop accounts because even if you lose one, you can get another one, right?
Yeah.
So it's a little bit of a different game. But still, you have to have some sort of risk awareness. So for me, a fairly good approach was to risk about 3 to 4% of the maximum loss limit on one trade, but then to never go over the 10th of whatever the maximum loss limit is, or the daily loss limit. We no longer have the daily loss limits on Topstep. So I would just say if you have, like, let's say 4.5K to play with, make your daily loss limit 450, and then mold that number into whatever number of your or trades that you do, because that will be different for everybody. Some people trade 1 trade, some people 2 trade, other people 40. You know, it's going to be different.
How would you? I think you might have touched this on your last show. I think people were asking about risk parameters on that, say the 50K combine, which is, you know, probably the most common combine that people go for.
Yeah.
What's your risk parameter? What you advise people to have? So
if I trade, well, I've got a 50K combine here actually that I've been working on. So let's go to my screen. So this one I've only done 1 lot, but I have limited my risk on crude oil to effectively only use about maybe $80 to $125 per trade. So I'm not, you know, and then if I lose 2, I just stop. So if I lose 250, that's like that's my personal daily loss limit. But on such smaller accounts, I would probably advise micros. Now, whenever I'm doing a 50K, I will typically not trade a lot. So I will do like 1 or 2 trades per day, no matter what the outcome of the trade is. And that's been an approach that's worked much faster for me than doing like a million trades on micros. So I basically look for very, very good opportunities that may not come every day either. So this is why this one is going like really slowly. But I only look for very high probability opportunities that have almost everything lining up for them. And then I can limit risk as well. Sometimes you have great opportunities, but you can't really limit risk because the price just went away from the high or the low too quickly. And for me, that will be the approach. So 1 trade at maximum $125, aiming for 2 trades per day, maximum daily loss limit on a 50K, 250. And that way you can survive pretty low for a pretty lengthy time in a combine, which is kind of the point, right? When you get to an XFA, there's no resets. So you have to have some coping mechanisms to be able to survive for as long as possible. And you're not going to do that by getting, like, for example, once this turns into an XFA, I'm not going to go in with 1 lot. I am going to go down to micros because now there's no resets. So then my risk becomes even smaller until I have a little bit of a buffer there. So typically about 500 to $1,000, maybe sometimes even more, depends on, how the first week goes. And then I can maybe look to size up a little bit.
Yeah, good.
Yeah. All right. Let's look at more questions. Oh, so we mentioned ICT. We immediately have ICT questions. Do you ever look at inverse fair value gaps? I will be perfectly honest, Spartan Nick. I have no idea what those are. I know what a fair value gap is. I have no effing clue what an inverse fair value gap is.
Is that just a reversal? Is that just a reversal of the fair value gap? I'm not too sure. I know what a fair value gap, because fair value gaps tend to line up with my Fibonacci golden pockets. Quite a lot of the time. I love fibs. Fibs allowed me to trade full time, and I do look for fibs. I like fibs to be at my extreme levels. A fib now is at around about just above the 19,700, so it's in the middle of the range. I don't actually like the fact that this local fib is in the middle of the range, but it is a zone that would interest me because of the Fibonacci. But and I bet there's probably a fair value gap somewhere where that Fibonacci is on some time frame with the ICT. But I don't really know a lot about ICT. To be honest, a lot of the levels that I've come across do line up with probably every other sort of TA, whether it's single prints, TPOs, EMAs, Fibonacci's, however you trade, a lot of the levels will probably match. But I mean, if you want to elaborate on that, that'd be great. But I don't really know what a inverse fair value gap is, to be honest.
So same. So the short answer to all of that is no.
No.
But, with all the questions that we get about ICT, I kind of feel a bit compelled to actually learn more about it. And every time I try to do it, it's like it's a lot of content, and we're all kind of busy people. So I'm not sure that I have so many hours in the day, because I'm also studying for Series 3 and, a whole bunch of other things. So obviously I have my own coaching business, and we've got live streams, we've got TopstepTV, we're pretty busy people. But I do try to kind of get chunks of concepts that he's got. And for the most part, I see that some of the stuff that he calls 10, 15 macro or whatever, that's like failed auctions from what I can tell. So basically it's a move where they kind of try to go higher or lower, and then they fail, then they turn around and they go back the other way. So again, very similar concepts. So every time I kind of hear of another concept, I'm like, oh, that's that. So I can easily match it up with something that I know already. But I'm gonna make an effort maybe next year to kind of familiarize myself, because there's so many ICT traders out there. Like I said, I feel compelled.
I think it's worth it, like you say, because
it is.
We're gonna learn something new.
Exactly.
How they look at it. Of course, you're always learning, but like it feels like a degree in trading is that amount of content, and people do take that away and become very, very good traders. There's no doubt they become very, very good traders. But I don't know.
Yeah, I mean, we're all like a mishmash of things that we've come across along
Well,
the way, and then we kept what worked for us, and we discarded what didn't work for us. So everybody has their own twist, no matter what you use.
yeah. Even like
Right?
when you coach, you coach your students. I coach some students.
Yeah,
They will run away with what you teach them and put their own
yeah.
spices and create to suit their personality or the way that they trade. Yeah.
Yeah, interesting because Coach Ray is one of my market stalkers. So we met in 2019, and actually, I think it was a Topstep interview that kind of led him to me. And he was an NQ trader at that time and wasn't doing very well. And then we set up some structure around the trading, and very quickly, I mean, out of all the people that I've coached, he was probably the one that got to consistency very quickly. So I moved him away from NQ, moved him into gold and crude oil, and just literally set structure around it. And he's learned all the method very, very well. He took the average session ranges out of it. He took the profile out of it. But then he did his own twist where he uses volume profile more than he uses TPO profile. So it's just interesting to see how people evolve. And then he uses channels. I use more horizontal price action.
Yeah.
And that works for him. It's just like, mind blowing. Then I have another guy who is trading for that Darwin X thing. So he's got his own fund there. He was one of my own as well, and he just swing trades gold, and he's doing swimmingly well. I can't stand swing trades these days because I would never sleep. I would be
Yeah.
always one eye
I
open
like
on
sleep.
the
Yeah.
charts. Yeah,
I like sleep.
same.
So I couldn't swing trade.
No, no. I did it for 5 years and it was great, but then, yeah, I don't know. I got older and it just, I needed to sleep. I didn't want to wake up with like, what's happened?
Yeah.
I don't know how Dakota does it. Full respect to him because I couldn't sleep through trades. No way. All right, let's have a look at some more questions. Jesse James says, question for Mr. Green. When M&Q is approaching highs or lows, what do you look for as continuations or reversals?
So continuations, I'm not good at continuation trading. I know breakouts statistically, obviously, don't break out quite a lot, and they can trap a lot of traders. Uh, so when it comes to breakouts, I'm not great. But what I would say about breakout trading is you've always got to look at the simple things of the break and the retest, but look on the retest for the lower term time frame candle shift rather than just the retest. You need another confirmation that retest for you to get in. It could be another candle, bearish engulfing, 100 tick chart, whatever you look for. You might use Bookmap, and there might be some liquidity somewhere or wherever you can obviously try and get into that trade. But as for reversals, because I prefer shorts more than longs. I don't know why. It's just the way that I see things. I do look for the 3 candle reversal, and then I like a retest of. You can normally tell where the wicks are and this little bit of where it's trying to trap you. And then now I've started looking at the 100 tick chart, and I wait for the 100 tick chart to break its level, and then that retest, and that can be within the 5-minute pattern, which just gives you that more defined entry.
So I've got a question for you. So the 100 tick chart, when you're looking at a 100 tick chart, do you look for, like, let's say you're looking for shorts, do you look for the breaks of the lows? Like what do you look for?
yeah,
Because I
so
really
for
want to understand.
example, let's go down. Say we're down here at the moment. Let's get rid of this. Let's get rid of this. Can we get rid of that? Is it going to let me do it? Yeah, there we go.
Mhm.
Let's make this into a 1 chart and put the 100 tick on. There we go. So what I like on the 100 tick chart is if, for example, we come, say we're in this zone here, and this part of the price action is, say, the lows, and we're looking to long from this area. Within the 5-minute candle, we're looking for a 5-minute candle, some sort of formation, 3 minute, 5 minute free candle formation. Get that one out when you've had a few.
It's early.
This may happen, the break up and the retest may happen when you break, for example, this sort of level here. And then what you're looking for is this might be the breakout on the 5-minute candle. And then this might be the retest. So then what you're looking for is some sort of retest in here. And you can see just by going off that, that this is an important level. You can see that there's some sort of interest here. And if 5 minute has shown me that that's trying to shift, and then we have that pullback, this could be the pullback on the 100 tick chart, and that's where then look to enter. You could even wait again to see if you break the last high and you get another entry on the pullback. So I like to have some sort of pullback because the market always likes to do that. Is remember what the candles are trying to play with our emotions and trying to make us get in and out of trades. That's what the market's trying to do. So when we move quickly, 9 times out of 10, well, not 9 times out of 10, but there's a high possibility that we're going to have some sort of pullback. We don't know how big the pullback's going to be. And that's where I think the 100 tick chart has really helped me, because my Fibonacci might be down here on, say, the 5 minute. If I don't look at the 100 tick chart, we might bounce here and I might miss this trade and say, well, why has it not come down to the Fibonacci? What did I miss?
Because it broke out of a range. So it's just
Because
retesting the broken range. Yeah, makes sense. Yeah.
And didn't come deep enough to where I would want to enter. Whereas if you look at the 100 tick chart, there's a possibility that we could just break out of the range on the 100 tick chart, little high, then a little retest at the top of that range, and then continue. And this can be in the 5 minute formation.
Yeah, so effectively you're looking for a range that is obvious on a 100 tick chart, a break out of the range, and then a retest of the range for your entry.
Perfect. Yeah.
Okay.
But at levels. So
of course. Not just randomly looking at it. Yeah, that's never going to work for anyone. I've had people who come to me and they're like, I'm going in. And I'm like, why? It's bearish engulfing. And I'm like, but where? And they're like, nowhere. I'm like, you have to have a level. Or it's failed the auction. Is it a short? And I'm like, do you have a level? No. Okay, then it's not a proper failed auction. But it failed the auction. I said, I know, but it's the probabilities. Like, you need it to fail somewhere where it makes sense, right? So we need VWAP, we need outer value edge, we need like a whole bunch of other things to happen. So just make sure that you have a level where you're looking at this sort of stuff that Francis is showing you.
It's even now, Dee, even here, whereas, people will say, well, you've broken out there and that looks like a retest. It is. It's a nice retest. If you're a breakout trader, that's where that entry is. Yeah. On the 5 minute term time frame, that touch there is literally the pullback on the 5 minute term time frame. So if you're a breakout trader, there's your entry. I'm just not a breakout trader. So someone may have a zone there. You've got range highs. That 620, I think Dakota was talking about it last night on Slow Markets. I called this morning. A break of 620 is more than likely going to bring us up to a zone of 700, 680, 700.
And that's your zone of interest, right? So that's where you're looking at. So there's nothing to be seen here because it's not your level, right?
Yeah. There's just nothing for me to trade here. From here until 680 to 700, 720, there's nothing for me to trade, even if I think it's going to go up, which this looks like an obvious trade. It's just not the way.
Yeah, it's not your level.
So I have
it's
to
not your level.
Yeah, I have
That's where the difference is. You see, the difference between someone who's got to a level where they're like, okay, I'm really particular with where I want to be a buyer, where I want to be a seller. Whereas a lot of people are like, oh, it's happening. I see a breakout. I'm going in.
And I struggle. I used to struggle a lot, and I've got better now. But even that, like, whoa, I knew that was going to happen. Of course I'm right. Why don't I do it? Well, I might try that 10 more times in the future, and it might blow me out of the water.
Exactly.
Because I don't know really, or I've not really studied that. So I have to leave it.
Same. Yeah, anytime I try and catch moves up to my levels, that never works. Or it works, sometimes, but generally it has a much lower probability of working out than me just being patient, waiting for the level and doing what I need to do once the level is there. But apart from that, it's all noise to me. Doesn't matter how juicy it looks and how, you're explaining the ranges and the breakout, test of the break. It doesn't matter. It's not happening at the level where you want it to be and where you want to see that sort of an event. So that's a very, very big distinction that people can take away from this. All right, let's have a look at more questions. Do you look at the low volume areas as a potential area to avoid or for price to go through it after an entry? Or do you look to have stops away from it? Thanks. Well, all of it. It will be, for me at least, it will be a case by case. Now, typically my stops, I like to put them away from any middles of candles, middles of ranges. So, for example, if I was gonna get involved in a trade that maybe looks something like this. I'm still new to these drawing tools. And if my stop loss was going to look something like this, that's a terrible stop loss for me because it's cutting through the structure, right? So I don't like to see that. If I can, I will wait for my entries where I can actually position myself away from any sort of recent highs, because these highs that pop into other areas, especially if they're overnight, they will be run through. That's a perfect opportunity for market makers to go and do their little stop run. They knock you out and then it goes your way. So very annoying thing. So that's why I'm very particular to not get involved in trades that cut through candles or cut through recent highs and lows, unless it's like a directional trade, in which case you're looking for a trade to just go. So let's say we were looking for a break into the low volume node, which is something that's happening right now. I would expect the prices to go through this area very quickly or to reverse from it. Which one is going to be a matter of the day type? Do we have a break of the initial balance to one side, or are we already breaking to both sides? And then also going one step further, are we failing the auction and building structure after the break? Or are we just slicing through it? And that's where time comes into consideration. This is why the other day when I was on with Jay and JD, we time stopped our directional trade because we were looking for ES to just go, and it didn't go. Maybe it was time of day or whatever, but that's what we were looking for. And the trade would have worked out in the end if we had stayed in from there all the way to the end of power hour, but it would have taken like half an age because at the end of the day it was directional, but it was slower. It was a slower auction. So to me, it would be a case-by-case thing. What about you, Francis?
I'm the same. I when it comes to stops, this is why I always try and go to extremes, because I feel uncomfortable when I know there could be buy side or sell side liquidity wicks, and because I'm looking to reverse the market. For example, if let me get a path. Where's a path on this one here? Even though it's the same as TradingView, I still struggle to find the tools.
I'm still getting used to it myself as well.
Yeah. So for example, this here, I know that my stops can just go, give me room below that wick. I know that if anything is going to try and grab that liquidity, stops here would be the same. I know, but here, I don't feel comfortable putting a stop there because we could easily come down because we still have these wicks below. So when it comes to where I put my stops, that pullback is nice. It's in the middle of this sort of range here. Again, not high probability, but it's where am I going to put my stop? And I've tried many times, and many traders have. You say, well, I know it's going to bounce here. I just have a tight stop. Comes, stops you out, and then it goes
Smack.
in your direction.
Yeah, smack.
So that's why trading within the middle of those zones, it looks so juicy at the time, but it's hard to put your stop loss anywhere. So that's why I like highs or lows, because if we're going to break the high and we're going to go. If we're going to break the low and hold, we're going to go. So you just have to be more patient when you're waiting for those certain levels, and you can be range low Dolby because the 5-minute range highs and range lows. So it can work on the 5-minute ranges. You don't have to wait for the extremes, but that would be classed as, say, an extreme on the 5-minute. So that's why, like Dee, I like to go to the outside. I was one of those in the nightclubs. I was never really in the middle. I used to be around the outside. So yeah, I'll stick to the outside.
I used to be on stage. I wasn't even
You was on stage, yeah.
Yeah, exactly. I wasn't anywhere in the middle. So yeah, that says something about our personalities. All right, let's have a look at more questions. If NQ and MNQ highs, lows, wicks look different, what do we trust? What to trust? That's a good question. Have we ever seen MNQ and NQ?
NQ. I don't look at the normal NQ chart.
See, I do.
I just look at the micro chart.
Yeah. Yeah, so that's something to be said actually. If you are trading M and Q, maybe just focus on M and Q. Like I don't really see the reason why why you would look at NQ and M and Q. ES, yes, and M and Q, I can understand that.
Yeah,
But NQ and M and Q is a bit of a weird, like you're just looking at the same instrument that has slightly different liquidity because of the market makers.
yeah,
But yeah, generally they will track together. So yeah, I don't think that's a very good way to spend mental capital, just staring at two charts that are basically the same.
yeah. Again, that mental capital, you're probably wasting more energy than you need to
Yeah,
be honest.
yeah.
Yeah,
So, but if that's the case, I would probably trust NQ because NQ is the bigger boy with
yeah,
more market makers. So
yeah.
I suppose that's the answer.
Absolutely.
Yeah. Here's a good question. Verti says, "What is your favorite time frame? Do you have a favorite time frame, Francis?"
As in to take trades on.
Yeah, obviously. Yeah.
The 5 minute. The 5 minute
5 minutes.
is what I like to take trades, but I won't do analysis if that makes sense. You know, some people just keep looking at the 5 minute. I like to go to the higher term timeframes to find my zones, and then my triggers will be on the 5 minute. I like to look at the 5 minute, and then obviously the 100 tick for to color, you know,
Time
to
the
be added
entries. Yeah.
confluence. Yeah, but
Yeah.
I won't trade 5 minute ranges, for example, or I won't trade anything like that. No.
Yeah. So for me, my favorite time frame, I would say that I look at 15 and 30 minutes as kind of just to get a picture of what we have. But I don't take my entries necessarily from those because I want to maybe front run a trade from a lower time frame. And in that case, I will look at a few different things. Sometimes it's a 1 minute chart with a couple of simple tools like a 90 MA and a VWAP on it. I might look at Renko charts as well, so something that's not time based. Tick charts work too. I find them, depending on what I trade, I either find them too noisy
Mm.
or I find them too slow, bizarrely. So I actually do look at 500 tick chart for something like, let's say, DAX. That would be interesting because it just doesn't have that many ticks inside it. You know, it's not an instrument that. If you look at the 100 tick chart, it will be very, very noisy. Like this, yes, you can
Yeah.
kind of identify ranges, but because I look for bigger chunks of the move, there's not that much information. I want to see it when it already starts to unglue itself on a slightly larger time frame. So for me, 500 ticks would be more appropriate there. Maybe if I was trading NQ very religiously, that would be more useful.
Yeah.
But my instruments tend to be a little bit slower these days.
Nice.
So
Dear,
yeah.
dear, I've just got to go and open the door. I think my wife's at the door. Give me 1 minute.
Okay. All right. So while Francis gets the door, let's look at another question. So at Deeyana, do you use pivot points or Camilla pivots? Same question for your guest as you mentioned Fibonacci. Personally, I don't use Camilla pivots. I have heard of them, but I've never looked at them. If I'm going to be perfectly honest, pivot points I used to use for swing trades, and I still look at them for some longer term positions. But I don't use them intraday. I use some other things that I feel have more weight for my intraday setups. So I use average daily ranges and average session ranges, which in a way are the mean average of something, right? So pivot points are similar. They are effectively high, low, and close of the previous day. And then some people look at that as the middle point. But I actually prefer to just look at the previous session high and low and midpoint. So let's say we're in London now, so I would look at Asia high, Asia low, and midpoint, and then see where we are in relation to what Asia did. And same thing if I'm trading the New York session, it'll be the same looking at the London session, right? So pivots for me don't have that much value intraday. So for me, it's a no. Francis, do you use pivots at all? Because you mentioned Fibonacci's.
So I only use the fib really, and another thing, what I do if I am in a scalp position, I will move my stop for each maybe pivot on the 100 tick chart, but that's only if and I'm just looking for the last time that would have bounced or made a low or a high. But actually for other pivot tools or anything like that, no, not really. I don't really use them, but they are good to use again, depending on your trading style. Again, they give you that confidence. Some people you can get out of trades a little bit too early. because you could have a fake move with the pivot, especially on the lower time frames. But overall, I don't really use them. But they again, they're just like most tools. They're good to use and add to your armory for sure.
Yeah. Right. And we got one final question. Francis, how did you define that level? How did you define your level of interest?
What on my charts? So obviously, I start on the higher term time frames. So you're going to have your daily high, your daily low, and then I come down to the 4 hour. Let's move this into a one chart. And then you can see zones of interest on your higher term time frames. You can see where you're going to have big SR flips, supports, and resistances. And then what I then like to do is once I've got the Asia high or the Asia low, as I mentioned in earlier in the stream, you can just see basically these levels here where you've got points of interest. And then the Fibonacci, I will take from the last high to the last low on whatever time frame you're using. Remember, the lower the time frame, the less significant it's going to be, as in a level to trade from. So if you were to pull a Fibonacci from your last 4 hour high to your 4 hour low, it's more than likely going to have some more substance when it gets to that level. And this one is just taken from the Asia high to the Asia low, which was our last drop. So, previous daily high to our previous daily low, which was our last drop. And then within the middle, we're going to get a Fibonacci, which lines up with that all-important level of around about 680 to 720. So it could provide an opportunity for another lower high. Simple things like your trend line, you know, looking for structure, things like that. 1, 2, 3, 4, 5. Is that going to do that? Just simple things that you look out for on market structure that might help you. If you get above that, just stay out of the trade. You don't get your confirmation, you don't get through candle formations, whatever. You just stay out of the trade, and you might then go back up to the previous daily high, where you then look again for any of your triggers. And that's for me. That's what I'll do today.
Yeah. So it's again very logical. I think people try to overcomplicate things, and even myself, if some people think that I have a very complex approach. I don't. Everything is really simplistic.
It seems like mind blowing.
But it really isn't. Like once you go through, like, because I have courses, and once people go through even the shortest courses that I have that are like an hour and a half, suddenly it all becomes very clear. And it's like, okay. And once you start putting those several components together, you don't really want to, like yourself, you have your fib levels, you have highs, lows. Well, it's a similar thing. It's just I look at the distribution curve from yesterday and how we're opening today. That's what we mean. Oh, it's short inventory, long inventory.
Yeah.
That's all it is. It's the most likely direction that we might take based on how the overnight acted. And the further out it is, the more likelihood that we're going to go back to the midpoint where we started from, right? So that's, very simplistic to me. And then the average session range is self-explanatory. Once we exhaust the range, we expect a reversal at that point, because it's like an extreme of intraday. And I know there's like a few moving parts to it, but at the end of the day, it's all just looking for structure, looking for understanding before you actually take a trade. And that's pretty much it. Right, we've got some plugs to do before we wind up the session. So thank you, Francis, for joining me for this lovely session this morning. We should do this again sometime, because this was very, very enjoyable. Big change from just me talking at the camera. All right, so obviously we have some new stuff that's happened to Topstep combines. Biggest one, removal of the daily loss limit. So going forward, daily loss limit has been removed, but it's only going to be present from newly reset and newly opened trading combines, along with the newly opened XFAs. So for those of us who have been there for a while, obviously we might need to contact support if you want your daily loss limit removed. Not that I would advise that. I'm going to keep mine, just FYI. Francis, are you going to keep your daily loss limit, or are you going to remove it?
No, I'll keep it. It's a disaster if I was to move that. Absolute disaster, yeah. Those days when you might go on tilt, you're putting yourself in a situation
Yeah.
You don't need to. One thing I've learned about self-development and trying to get rid of bad habits in your life is just make sure you're not in that environment. And
Yeah, environment plays a big part. I don't think
environment,
it should be like a huge excuse for all behaviors, but there's definitely something to be said for environment. I'm always very careful these days because being a musician, you have a lot of people that are lost, and you know what I mean. You've been in a similar environment, so you kind of get dragged down
you
with
get
them.
dragged in, and
Yeah, it's like let's go clubbing and I'm like I've lived in clubs and worked in clubs. Like I
yeah.
don't want to go clubbing anymore in my 40s. Like enough. Uh,
And we know, you always
yeah,
say after 11 p.m. it's silly hours, silly
yeah,
people around. So
silly hours. Yeah, exactly.
silly hours.
Yeah. I mean, London has changed. I don't know where you are in England, but London is not as crazy as it used to be. In fact, I don't think you can find a drink these days
Oh
past sort
wow,
of like 11. Yeah, there was
wow,
that all night license,
yeah,
and very few bars and clubs have it. Everybody just shuts at like normal 11 or 2 a.m. if it's a bar, and then
wow.
that's it. Yeah,
That
it's
is
changed a lot.
interesting. Yeah.
So yeah, it's very different, right? So why remove the daily loss limit? Well, it might give you more control over your trading, flexibility to trade with more or less size. Now, I would say that there is a place for this once you built up a buffer in the account. So not immediately, right? So for the first few days, I would say, build that buffer, take it slow, and then maybe once you have a bit of a buffer in your XFA or in your combine, you can give yourself a little bit more room, right? Not like the whole maximum loss limit, but a little bit more room. So it does allow for more flexibility in your trading. It creates a more personalized trading experience. It will offer you a more realistic trading environment if you were ever to, make your money in prop, go trade your own capital. Over there, unless you have some additional external plugins and tools, you're not going to have those guardrails, right? So this offers a more realistic expectations of what can happen in your own account. And obviously, we are now able to have the full maximum limit access. So if you want to use it, go nuts, do you, but I wouldn't advise it. So you can set a personal daily loss limit in Topstep. So I'm going to show you how to do that. So if you want to still keep your normal daily loss limit at 1,000, there is a cog. So when you press on the cog, you go into Risk Settings tab, and then you will see this little thing called the Personal Daily Loss Limit, PDLL. So if you set that to 1,000, that's the first step. There's another step. If you say PDLL action, do nothing, it's not going to do anything. Okay, so you actually have to tell it what you want it to do. So if you want it to block you out, to close out the trades and to manually basically just cut you off, you have to put liquidate and block and then press save. Okay, if you don't, it's just gonna get to 1,000 and then nothing will happen. The position will still keep going. You can also set it just to liquidate and not to block you. So if you want to have $1,000 of per trade or something, you can just set liquidate. Once it gets there, it will automatically liquidate you, but it won't block you. So if you want to keep your daily loss limit, you have to absolutely say liquidate and block. Okay. So again, you do you. It's no problem. It's your money, your combines, your XFAs. But for me, I will keep my loss limits to liquidate and block. So let's do that. It's a 50K. So now that is set. If I lose $1,000, it's going to knock me out, right? And it's not going to allow me to trade until the next trading day. Now, we have another thing to say. We are having a casting call. So we're looking for traders who want to come onto TopstepTV to trade with us and to share their story. So everyone is welcome to apply, from everyone, just people that are just starting out to the people in our live funded traders. If you want your shot to trade live with our crew, you will need to get your name over to us. There is a link that I'm going to drop in the chat. So just give me a second to grab this. If you want to apply, if you want to come trade with me, with Francis, with MP, with everybody, that is the form to apply. And then we can hang together. And obviously, to finish this up, we have some evening programming. Topstep TV not only covers the New York session, New York Open, but the New York close as well, along with the Asian, London, and the Sunday futures market opens. So you can join Coach Dakota at now it says 8 p.m. I don't know whether he's still doing it at 7:30 p.m. So Sunday through to Thursday for slow markets class. Then you're going to catch Nick for a tick at 4:45 p.m. Central on Sundays for market kickoff, and catch myself and sometimes Francis at 3:30 a.m. Central Monday through Thursday for the London Open. Right after Power Hour, you can also catch Coach Jay at 3:15 p.m. Central, Monday to Friday for At the Buzzer. So that is it, guys. Enjoy the rest of the program. And Francis, thank you so much for being here with me. It was a real pleasure having you here.
No, it's good. Yep. Yeah, I really enjoyed it. Really enjoyed it. So, maybe we can do it again.
Yes, definitely. I would love to have you on
as well, by the way. So
yes, I saw that. Yeah, I saw that. I found you immediately because you tagged me, and I was like, "Hey, he's got Twitter now."
I've tried Twitter about 5 times over the last 10 years, and I'm not a social media person, but I suppose I have to be now.
Yeah,
so
I feel
just started
yeah,
so,
I'm the same. I'm not a social media person either, but I have to be. And you'll notice that on my Twitter, I don't really post all that much, and then it tends to be a bit random, like kind of like dogs and food and just.
So I'm gonna give it another go. Because I've got the YouTube, but not everybody comes and watches the YouTube. They sometimes are on Twitter, so I thought I would. Both,
So we can find you on Twitter. Do you mind if we share your Twitter?
Yeah.
I think that would be helpful.
I think
I'll find you. I'll find you. Yeah. Because I did tag you in a post.
Yeah, it says Francis_J Green. Yeah. That's Twitter. Yeah.
And you can tell that we're a little bit older by the use of the underscore, because I don't think that Gen Z uses underscore. We both have underscore.
I believe that you're 80s, so
yeah,
exactly the same as me.
I'm
so
80.
Exactly the same.
I'm 80.
Yeah, it's the same. Don't worry. We're both the same.
Excellent. Awesome. So underscore rules. So find Francis Green on Twitter at Francis_J Green. Okay, so I'm going to copy that link into the chat. You can all follow him there. There we go. Okay. That's it, guys. Thank you so much for joining us. Like I said, enjoy the rest of the broadcast. Francis, enjoy the rest of your day, and we will see you soon on TopstepTV and on your Twitter.
You too. Great to see you all. Have a good day.